Hey guys, Angel here with the Bullish Bears team. I'm going to make this video today on how to make money in a bear market. So we have our handy dandy tool of Investopedia pulled up, and we're going to define what a bear market is. And a bear market is a condition in which securities prices fall and widespread pessimism causes a stock market's downward spiral to be self-sustaining. Investors anticipate losses as pessimism and selling increases. So you may be wondering why we're talking about a bear market so much lately, especially if you're new to the stock market. So we're going to take a look at our S&P futures, and you can see that right now we're in a pretty big downward move. Now, is that the beginning of a bear market? We're not exactly sure, just because a bear market is defined as such if it has at least a 20% drop over a period of a couple of months. So it's only been a couple of weeks. So is it just a market correction? Is it the beginning of a bear market? It's going to take some time to find out, and typically they say that you don't know what the market was as far as a bull or a bear market until after it's over and a new one is started. Now we know that we've been in a bull market for a pretty significant amount of time. If you just zoom out here, you can see that it's been outside of over here. It's just been pretty much going up. It took a breather around like February to April, and then it continued to go up and hit all-time highs, and where it traded sideways, and then it's just been going down. So it looks like a potential hammer candlestick is forming where it could be hammering out a base. That could mean that it goes up, could mean that maybe they just didn't want, the bulls don't want the market to drop anymore today. So we're just gonna find out where it's going. You can see I've been looking at the S&P futures and have all my lines drawn, and it broke out of this descending triangle, hit this angular support, broke out of that, and this is actually, if you zoom back out again, you'll see that this, where this little wick is another support, and it didn't break. Instead, it is hammering out that base. So if you're an investor, if you're looking at your retirement fund and you see what this past few weeks has been doing to it, might freak you out a little bit. As a trader, your favorite color is green, not red. You don't like to sign into your account and see that red. No, you want to see the nice color green, because green is money. And we don't like to lose money. We don't want to bleed that money out with those red numbers and candlesticks. So we want to learn the couple different strategies to employ to make money in a bear market. And so if you are an investor, or if your accounts are red, like, don't fret. A bear market is shorter than a bull market. It's not always gonna stay this way. And there is hope. And if you learn the different strategies, then there's even more money to be made, not just in a bull market, but also a bear market. So we are gonna start with short selling. So short selling is something that a lot of traders, especially day traders, love to do. You don't actually own shares of anything that you short. What you do is if you believe the stock is going to go down in price, you would go to your broker and ask them for shares to borrow. Then you would sell those shares to somebody else as price went down. When you hit your profit target, you would then cover your position, which means you would buy them back. Those shares would go back to your broker, and then you would get to keep the profit. So shorting can be a little risky, just because if you choose the wrong direction, theoretically, you could lose everything, because the stock can always continue to go up, but it can't go below zero. So that's where risk management comes into play. You have your stop losses. You want to make sure you keep any losses to a minimum with short selling, even with going long. But shorting is a very, very popular way to make money. A lot of people like it because it's easier to find a top of a stock and write it down than it is to find a bottom and write it up. Now, brokers don't always have shares to short, so you want to make sure that if you do like shorting or want to short, that you have a broker that has shares available. So sometimes that can change the way or the broker that you go with. Now, if you like the broker you have, but they're not real big on short selling, there's another strategy that you can try, and that is options trading. And options trading is my favorite thing. So they have the call side, which is the bullish side, and then they have the put side, which is the bearish side. And all brokers have options trading, so no matter what, whether the stock market is up or down, and if your broker doesn't allow shorting, they will have options. So you can still take advantage of making money in a bear market with put options. So we're going to pull up my favorite stock, NVIDIA. It happens to be, in my opinion, the Tom Brady of stocks, also known as the GOAT, because Tom Brady is the greatest quarterback of all time. And that is NVIDIA for me with trading, just because it moves so often. So like you can see this here, you could have actually shorted it a couple of days ago. If you had gotten in at the top, you could have bought your put option at the top of that, 219.86. And if you day traded it, you could have rode that all the way down to 299.04. So one options contract controls 100 shares, and it's a lot cheaper than trading options and owning those shares outright. So if you look at this, where it opened 219.86 all the way down to 299.04, that's like a $20 move. So with options, because there are many moving parts, so you do have to be careful with that, which would mean that you got to study and take our options course. You could have made a ton of money with just buying a put that day. Now, buying puts is risky. There you can also sell. There's a ton of option strategies. The great thing about options is that you can make money in any market, because they have a strategy for bull markets, bear markets, and even sideways markets. But put options, because it controls 100 shares, you're not putting as much capital up. So if you take a look up here, we go to the trade button. This is an options chain for NVIDIA. Now, if I was just going to day trade this week and I didn't want to buy out to November, I could just look at today, and let's say I wanted to short it down to, I thought the stock was going to reach $200, and I wanted to short that down. I'm only putting up 100, and because it's the options price is 157, or I'm sorry, not 157, $1.57, and then I actually just like to buy one at a time. So it's $1.57, and if I go to confirm and send that, I'm actually only putting up $153 as opposed to 100 times $200, which would be $2,000. So $153 as opposed to $2,000 is a big difference. And then you also make a whole lot more money because of the Greeks and the different things that are involved within options trading. But put options are going to be an incredible way for you to make money in a bear market, and every broker has them. You can't beat that. Short selling and options trading are great ways to make money in a bear market. So if you want to learn more about that, you can read my blog post on how to make money in a bear market. We even have our courses up here that teach you how to trade options. I believe our day trading course might also have short selling courses in there, or videos that you can watch. They're great tools for you to take advantage of. And if you guys like this video, then please like or share and follow us, or like and share, and follow us on YouTube so you can get any notifications about any videos that I do, because I'm still better than the guys. I'm sorry, guys. I love you boys, but I am the Tom Brady of the Bullish Bears. And we'll see you guys next time.